Alright, hello YouTube. It's time for the next video, so let's make a video. This is the video that I promised that I was going to make on my introductory video that we did last week. Sorry it took me so long to get back here to make another one, but it's been a very busy week. So the title of this video is going to be, what is Bitcoin and why should you care? So what we're going to do is we're going to take a look at Bitcoin, some of the aspects of it that make it special, why I believe so much in it, and why it's important. Now, I did a little bit of work on this. I tried to create some visual pieces to accompany the things that I was going to talk about to make this easier to understand, because the technology is very difficult to understand and it can be very, very complicated. So I tried to break it down to the simplest form, and I tried to think of an example or two to express to people that may not be able to grasp it if we get overly technical, what Bitcoin is and how it all works. So we'll start with this. To really understand it, the first thing you need to understand is the underlying technology that it runs on top of. Bitcoin runs on a technology that's referred to as the blockchain. And the way blockchain technology works, I'm going to pull up a little display that I created. All right, so let's see. I'm going to go to diagram 1. All right, so this isn't overly high quality production values or anything. This is just me pulling out a word sheet and trying to put something together to help. All right, so the blockchain. In a standard transaction, let's say you go to Walmart and you buy something from there, right? And you pay with a credit card. Well, that transaction happens between you and the entity, right? And you exchange, they exchange goods to you, you give them money, and they give you a receipt to document that transaction, and they get a copy of that receipt, typically in a paper form and digitally, and then they take that information and they store it wherever they store it. A long time ago, before we had mass computer adoption, that would be in file cabinets. And then when you were a big company that had, national offices, that would be file cabinets located in different areas. Well, now everything's in the cloud or digitally stored on hard drives or servers somewhere. So what happens is transaction happens, they exchange receipts, and then it's stored on the server or wherever the storage is. That centralization of the storage is where the gigantic change is happening with blockchain technology. Storing something on a central server gives you a target point. If you're a hacker, like what happened to Equifax recently, what happened to Wells Fargo not too long ago, what's happened to many places, is when you have a central server that gathers all this information and holds it in one place, it's an easy target to go and attack that target and extract from that whatever information that you're seeking as, a hacker or anyone else with a malice intent or just intent to get the information anyway. All right. So contrarily, this is a diagram that I made to, as easy as I could figure, explain blockchain technology. Okay. So basically with blockchain, the transaction happens between you and the entity still, right? But the difference is that transaction is then sent to every network participant that's in the network. And what this is called is a distributed system, right? So there's no one entity that gets all this information, but still there's another step. These network participants could represent millions of different computers and processing locations all around the world, right? And then all of the information is put on one ledger. So every single transaction that ever happens goes out to everyone on the network, fully transparent. Now, you don't have to have necessarily your name attached to these transactions. It's a number that's assigned to each transaction, but all of the transactions, each individual block, as they call it, is sent to this ledger, and this one ledger keeps history of everything. And this is a huge deal. I mean, this is probably the biggest shift in technology since the internet, because what this enables is you can't access any one of these points without it being able to cross verify. So if you want to change something that's on this ledger, you put that request in it's going to cross-reference your information across all these other network participants or other computers on the network. And you have to have what they call consensus. And you have to have your transaction validated across by all of these different computers. And what this does is it makes it virtually unhackable, because you would have to hack every single market network participant or shut down the internet to be able to get to this ledger and only have one network participant available and shut everyone else down. I don't even know how you would do it. This protocol has been in place since 2008 or 9, and it's yet to be hacked. So as it stands today, it's unhackable. And this ledger, this central ledger, but a decentralized way that it gets written, is a dynamic paradigm shift in technology. There's so many implications that you can use this for. Okay, so that's how blockchain technology works. It's kind of like if you told you were going to tell somebody a secret, and you said, "Hey, I'm going to tell you this," and you keep it to yourself. Okay, and you're whispering, right? Well, this would be the equivalent of, we're not allowed to have secrets. You know, anything you tell me, I'm going to tell it to 3 million other people, and we're going to time, date, stamp it exactly when you said it, where you said it. And then anytime someone tries to question that secret, we have all these different people we can verify it against to say whether or not it was true. So it removes trust. You don't have to trust anybody. You don't have to trust anybody with your information. You don't have to trust anybody to process something. It's built into the fundamentals of this protocol, right? So that's where blockchain is important. So where that comes back to Bitcoin is the currency that it's kind of like the first Andreas Antonopoulos. I hope I said his name right. You guys should Google him and look up some of his videos on YouTube. He's a genius, and he's kind of the forefather of information when it comes to Bitcoin. Definitely look him up. I'll see if I can look his name up and put something in the description box. But Bitcoin, basically, he always says that Bitcoin is the first app built on this technology. So basically, I don't want to get too technical about it, but Bitcoin come into existence through a mining process. So basically, those market participants that we were looking at on the other screen, let's go to this. So these market participants, they process transactions for the network, and they're given complex computer algorithmic problems to solve, and they're very complex. And as they solve those puzzles, they are awarded with Bitcoin, right? So the network participants, without them, there is no network. So you have to pay them for their processing power and the power that they're using to make the network, to be possible. And they get paid in Bitcoin. So Bitcoin is the first form of currency to be used on this form of technology. And the powerful thing about it is it's a non-centralized, non-government controlled way to transfer value from a person to a person. And you can do it direct with someone, and the fees are minimal. It's built into the protocol that there's a fee, for changing it over to pay the miners or the network participants that are making this possible. But these network participants are in China, they're in the US, they're in Asia, they're in South America, they're in Africa. They're everywhere in the world that are part of making up the network. So you can't attack any one portion of it to take it down. I mean, it's a group effort to make this network, and the protocol requires the consensus, and the trust is built into it. It's really an amazing thing. So Bitcoin is basically the next generation store of value. It was designed a lot like gold. There's a limited quantity of gold. I think there's 2 Olympic-sized swimming pools of gold on the planet, right? So it's a limited commodity, which means it's not really going to change in value too much, because you can't really make any more of it. It is what it is. There's only a set number of it. But as the demand grows for it, its value raises, because you can't just go find more. Bitcoin's the same way. The mining protocol allowed a certain amount of Bitcoin to be created every 10 minutes. And that halves there's intervals, I can't remember if it's every 2 years or every 4 years, but it halves how many, it goes in half. So if it was making, for example, 50 Bitcoin per 10 minutes. It goes down to 25 every 4 years, and then down to 12 and a half, you know, that kind of thing. So there's intervals, and I don't know exactly what those intervals are, but the point is that it should get more expensive to mine Bitcoin, meaning you're using more power, more electricity, and more computer processing power to find less coins over time, which makes it anti-inflationary, right? It's deflationary, basically, because unlike the government, where if you get into problems with money, you just print more, you can't do that with Bitcoin. There's a set amount of it. So the only thing that can change is the demand, right? So why should you care about this? Well, A, it's a store of value that has an international use, right? And it's a limited commodity, which means as adoption grows, the only thing that can happen is the value goes up. That's it. It can't go down because there's only a set finite amount of them. So as there's interest and more growth in usage, you're just splitting more of the same piece of pie, which drives the value of it high. It's a simple supply and demand thing. And the thing about it is no government can influence that. Now they could try and influence it by, you know, buying up all the Bitcoin, or, you know, there's always quantitative easing in some form of it that the government's going to try to employ. But the system is based on resisting that, and it's shown that up until this point. I mean, it's been attacked since it's been out, and it's still here and it's growing. And as we look at this, the first transaction that I know of was a gentleman in Europe bought a gentleman in Florida a pizza, or two pizzas, from Papa John's, I believe, and he spent $30-something, and the guy transferred 10,000 Bitcoins to him because they weren't worth anything. This is 2009 when it first started. They were mining them. They were easier to find. The computer programs were easier. You could use your laptop computer, lend it to the network to do mining, and you get paid in Bitcoin for, you know, making the network with a GPU off of your laptop. Well, those 10,000 Bitcoins today would be worth, you know, over $700 million, right? So we're at 1% or less than 1% saturation for Bitcoin. And this protocol and this underlying technology of the blockchain is apparently here to stay. So this is a huge opportunity for us as investors, for one reason, right? And the adoption of it, most of the people listening to this video are probably in G7 countries. You know, you live in the US, Canada, Great Britain, you know, these kinds of areas, a G7 country. And it's really hard for you to grasp why Bitcoin or another payment alternative is really needed. I mean, you're in your country, it's easy for you to use PayPal, it's easy for you to use your credit card, it's easy, your currency for the most part is pretty stable. And, you know, a dollar versus a euro is a 1.2 ratio, and it's been this way for years. You know, it doesn't look like it's going to change much. We don't have very much fluctuation, so we don't really see the value in Bitcoin. But you have to understand, the world is global. You know, Titanic only sold $600 million in the US, but it made $2 billion worldwide. There's a lot more people out there than just us in these countries. And 2 billion people in our world are unbanked. They don't have any banking services. They don't have bank accounts. They don't have credit cards. They don't have checkbooks, any of that. And then about 4 billion out of the 7 billion of us are underbanked, which means we have pretty, you know, remedial banking or very limited banking options. So the use case for Bitcoin, the biggest use cases aren't in America. They're not in G7 countries. The best use case for Bitcoin is in these countries where you're unbanked. If you live in Venezuela, for example, and you have a relative that's hanging out in Japan, and your Japanese friend or cousin or family member wants to send you money, you have to go through a bank. There's wire transfers, there's exchange rate fees, and then there's the time. It may be 5 or 6 days and 15 to 20% of whatever you were trying to send them in cost before they get it. And with Bitcoin, that could be a 5-second transaction on your phone with very minimal, less than 1% of a fee. This is a humongous deal. There's 4 billion people on the planet that could immediately benefit from this. Lower cost of money, easier cost of transfer, anonymity for certain transactions. Again, in our country, that's not a huge deal sometimes. We let the government peek in our life and everything. We joined Facebook, for God's sake. If you look at the rights and the agreements and everything that are in there, they're allowed to do everything and search your phone and all your content and your location and everything that you give them access to. And we're okay with that here, right? That's not so much in other countries. We have to think bigger. The world needs a universal currency that could bring some stability. Bitcoin's not stable, but no new technology is. It's gonna, with more liquidity. The CME just announced recently they're going to do futures for Bitcoin by the end of the year. That's huge. That means that the institutional investors have a route to get involved. Futures are going to give them, EFTs are sure to follow, and we're going to have adoption of mutual funds and hedge funds and larger institutional investors, which are going to bring so much liquidity to the market that the actual adoption rate is going to increase because the transactions are going to go up, and it's going to make the news. It's going to be a bigger deal, and the more people that are using it give it validation, and it's going to become an actual store of value. It's well on its way. I mean, you look at this. It's got $117 billion market cap now. I mean, Bitcoin was $1,200 earlier this year, I believe, and it's sitting at 7,000. And the transactions haven't gone up significantly. This is just point of view and speculation. It's people buying in. You know, people with larger money and institutionally, they're starting to buy in. And this is happening, people, right in front of us. All right, so over time, this is going to be a really big deal. So what I'm venturing to do with this channel, as I discussed in my last video, is we're going to step into investing in platforms that can increase either our Bitcoin holdings or a platform that requires Bitcoin and is going to pay us back. You know, I want to invest somehow in this technology and be a part of this wave. And I think it's a really good idea that you guys do too. You don't necessarily have to follow me and the investments that I'm going to display on this channel. I'm doing that just to document it and see how it turns out, and you know, we'll go from there. But do something. Go out there, get you some Bitcoin and stick in your portfolio. I had an Excel sheet up earlier. Let me see if I can take a look here. Yeah, okay. So I spitballed this. I made this in like 3 seconds after a little while ago, right? So right now, Bitcoin's market cap is around 121 billion, right? Which puts the value, you know, a little over $7,000. And this is how many Bitcoin there are. Just to give you some perspective from an investment standpoint. Gold, for example, has a $9 trillion market cap, okay? And I think Bitcoin is basically like digital gold. It's a store of value that can be internationally widely accepted, and then you can exchange it for whatever currency in the region that you're in. Same as gold, and it's a limited commodity. Yes, it's digital and it's not a piece of metal, but I mean, why is the piece of metal important? Because it's shiny? I mean, we accept gold as being valuable because it's rare and because we've always been told that gold is worth something, right? I mean, copper is good for wires too. You know, not quite as good a conductor as gold, but the intrinsic value is in the eye of the beholder, in my opinion, right? We use paper money today that only has the backing of our government, but what does that mean in Venezuela when your money overnight is worth nothing? Okay, so sorry, I got off on a tangent on that one, but here's my point. It's simply a play on market share. If you look at the market cap now of 121 billion, this is what the value is, right? There's not going to be any more here. There's not going to be any more. They don't make it anymore. The mining process is ongoing. There's ultimately going to be 21 million of them, and that's going to end in 2021-41, I believe, that I read. Fact check me on a lot of this stuff. I'm just kind of guesstimating and throwing numbers out there in the range of, but you know, I could be off a little bit, but I know there's going to be 21 million, but you know, some of these numbers are a little bit estimated, right? But here's my point. If it was to reach $1 trillion in market cap, and I don't know how feasible you think that is, but it was less than 40 billion in market cap earlier this year, and now we're at 120. So let's go to 1 trillion. Remember, there's not going to be any more Bitcoins. So as the market cap goes up, means the demand for usage of Bitcoin, the trading of it daily, goes up. The only thing that can happen is the value of the actual coin goes up per coin. And if we ever reached the 9 trillion that gold currently holds, I mean, you got each Bitcoin worth over $500,000. So that's my case for Bitcoin. It's a tremendous investment opportunity. It's huge on a global level. The banks are scared to death of it because it removes the need for a lot of their financial services and turns the what can I say, the hold that they have on our financial systems, it turns it on its ear. They're going to fight this thing tooth and nail. I think the adoption rate is ready to grow, but I think the opposition is going to be super strong over the next couple of years to fight this, because it's going to ruin everything for a lot of people. So that's my take on it. I know I told you in the original video we were going to follow my progress on these investment platforms, and we're going to do that starting with my next video. We're going to break down BitConnect. I'm going to pull up my account and show you the investment strategy, my thoughts on BitConnect, how much money we're making, what the balances are, and then we're going to follow it day by day and see where it lands us as we invest in Bitcoin. So thanks for spending some time with me here today, and I'm sorry the video was so long. We'll try and shorten them up as we go. Video number 2 in the books. Y'all have a good day, and I'll talk to you soon.